Hello, welcome to this presentation on business responsibility and sustainability reporting, commonly known as the BRSR framework. My name is NVS Pawan. I'm a chartered accountant and a GRI certified sustainability professional. This will be my fourth presentation in this deep dive series into the BRSR framework. In my earlier presentations, we had discussed section A of the framework, section B of the framework, and the BRSR core of the framework. In this presentation, we will start discussing section C of the framework. This presentation is specifically about disclosures under principle 1. Let's get started. The disclosures under section C are basically the key performance indicators which are aligned to the 9 NGRBC principles. These indicators are of two types: essential indicator and leadership indicator. Essential indicators are expected to be disclosed by all entities to whom BRSR is mandated, which is the top 1000 listed companies on the stock exchanges. Leadership indicators are voluntary in nature and can be disclosed by all those entities who are aspiring to go to the next level in environment, social, and governance responsibilities. In this presentation, I have shown essential indicators in blue and leadership indicators in green color. Let's take a look at principle 1. Businesses should conduct themselves and govern themselves with integrity and in a manner that is ethical, transparent, and accountable. What is ethical? Ethical means the business should not involve in unfair trade practices and illegal activities. It should also have internal controls in place to ensure that the employees do not engage in bribery or any kind of corruption. Being transparent means a business will be transparent and disclose all its information, whether positive or negative, in a timely manner to all its stakeholders. What is accountable? Accountable basically means the business will follow the law of the land and pay its taxes in a timely manner. Under this principle, there are 9 essential indicators and 2 leadership indicators. We will take a look at the essential indicators first. The first essential indicator is the percentage coverage by training and awareness programs on any of the principles during the financial year. Now we'll see in this entire BRSR framework that there is a lot of weightage given to training and awareness programs. Under this disclosure, the company has to disclose the number of training and awareness programs, the topics included in the training and awareness programs, and the percentage of people who are covered under the program. Who are those people? These people can be board of directors, key managerial personnel, employees other than the board of directors and KMPs, and workers. Let's take an example to understand this disclosure. TVS Motor Company Limited has disclosed in its BRSR report for 23-24 that it has covered 100% of all the persons under each of the segment through its training and awareness programs. The training and awareness programs were conducted for Principle 1, 2, and Principle 6 for Board of Directors and KMPs. Principle 1 is on good governance, Principle 2 is on sustainable products, and Principle 6 is on environment restoration. Employees and workers were given training on all the principles. Another example, Marico Limited has also covered almost 100% of the employees and board of directors. However, it has given details of the training program, the topics which it had conducted, which includes POSH in every segment. POSH is prevention of sexual harassment against women at workplace. Then insider trading has been conducted, MS Excel has been conducted, and habits of self-effectiveness, etc. Workers have been given training in health and safety and product quality. Coming to the second disclosure, here the company has to give disclosure about the fines, penalties, and compounding fees paid by it or any of the companies or directors or KMPs against a case which has been lodged against them in any of the enforcement agencies or judicial institutions. Now, these cases can be monetary and non-monetary. So the company has to disclose the NGRBC principle, the name of the regulator, the amount involved, the brief of the case, and whether an appeal has been preferred in the higher adjudicating authority. Now, in case of monetary, there could be penalty, fine, settlement, compounding fee paid, or in case of non-monetary, there could be an imprisonment or any other kind of punishment. Now, should the company disclose everything again for all the cases where a penalty has been paid? No. So only material amounts needs to be disclosed. Now, what is material? That is defined by regulation 30 of the LODR agreement, which basically says that any information which can have a significant impact on the stock price of the company is material. So let's take an example. In case of Marico Limited, it has incurred 4 penalties from all the indirect tax offices only, and the penalties range from 1,88,000 to 4,15,000. And it has preferred an appeal in case of penalty number 2, and it is in the process of filing an appeal for penalty number 4. All these cases come under principle 1 of the NGRBC principle. Now, in disclosure number 3, which consists of details of the appeals which have been filed, we'll see this particular penalty 2 again being disclosed here because an appeal had been filed with the higher adjudicating authority, which is Joint Commissioner of Sales Tax, Ahmedabad. So that was disclosure number 3 regarding the details of appeal. Now, disclosure number 4 is about the policy on anti-bribery and anti-corruption in the company. So whether the company has an anti-bribery and anti-corruption policy, if yes, then provide a web link to the policy. Let's take the look at the web link which has been provided by TVS and Marico one by one. TVS has provided a web link of its code of conduct. It is interesting that his entire document, there is not a single word of bribery or corruption present here. What is present here is gift or entertainment in any form that is likely to result in a feeling of expectation of personal obligation should not be accepted or extended. This is the only definition of a bribe which has been mentioned here. And with regard to corruption, no board member or senior management personnel may take unfair advantage of the company's customers, suppliers, competitors, or employees through manipulating, concealment, abuse of privileged information, misrepresentation of material facts, or any other unfair dealing practice. This is the only place where corruption and bribery has been mentioned. The rest of the document consists of conflict of interest, the duties of the employees and directors, and statements that all the employees should conduct themselves with honesty, integrity, and professionally. Now, let's take a look at the anti-bribery and anti-corruption policy of Marico Limited. What Marico Limited has done is, it has given a complete definition of bribe. That is, receive or take any charitable donations, promise or receive any favor in gratis, receive anything of value, and anything of value has been specifically defined as cash equivalents, gift cards, voucher, retail certificates, airfare, accommodations, special favors, and the like. Again, it says payments of any kinds to government officials. Now, it has also given acceptable practices, which is a guide to the employees, meals of modest nature, occasional attendance at ordinary sports, theater, or any other cultural event, gifts of nominal value, these are acceptable. Again, it talks about a committee, talks about a code of conduct committee which will be dealing with all these bribery and corruption cases. So there is a web link provided and an email provided where complaints against bribery and corruption can be lodged. So that is how companies are disclosing. One is extremely detailed. The other has just made a mention of what is bribe and what is corruption. Next, coming to disclosure number 5. Disclosure number 5 is in the financial year for which the disclosure is made, the number of directors, employees, KMPs, or workers against whom disciplinary action was taken by any law enforcement agency for the charges of bribery or corruption. So the first disclosure was whether there is a policy to deal with bribery or corruption. Now the disclosure is whether any actual disciplinary action has been taken for a case of bribery or corruption. Again, there are 4 segments: directors, KMPs, other employees, and workers. Now, for this particular disclosure, I did a research on all the BRSR reports which were filed up to September 10th, 2024. So there were around 1080 BRSR reports which were filed. So what is the research result is, if we take the number of disciplinary actions for both financial year 23-24 and 22-23, which is the previous year combined, then most of the disciplinary actions were taken against employees in all the companies. So it is at this level that most of the bribery and corruption is happening. Coming to disclosure number 6, this is another concept which is conflict of interest. Conflict of interest is a situation in which an individual is confronted with choosing between the requirements of his or her function and his or her private interest. So function or private interest, what is more important? That is the conflict. The conflict of interest has been explained at length in the Companies Act and in the LODR agreement. Section 84 and Rule 9 of the Companies Act require that every director in the first board meeting of every financial year has to disclose a list of entities in which he is interested. And any business with those entities in which he or she is interested, will be a point of conflict of interest for that director. Now, Section 88 and Rule 15 says that whenever there is a conflict of interest for any director, he or she should abstain from such contracts. That is, should abstain from such meetings where the contract is being disclosed. LODR regulation number 23 also says that all the related party transactions, that is, in which any of the directors or KMPs are interested, all these transactions have to be approved by the audit committee first, and then it should be subsequently approved by the board of directors or the shareholders, depending upon the quantum of the contract. Now, in the BRSR report under disclosure 6 of principle 1, the company has to disclose the details of the complaints regarding conflict of interest in the board of director level or in the key managerial personnel level. Mind you, the disclosure is not about the number of cases where conflict of interest arose. That is a normal thing. What is the disclosure about? The disclosure is about the number of complaints which were filed by the aggrieved parties regarding conflict of interest at board level or at the KMP level. Coming to disclosure number 7. Disclosure number 7 says that in the financial year, whether any corrective action was taken on the issues related to the fines, penalties which were paid, or any bribes or corruption cases, or any conflict of interest cases. What is the improvement which the company has done when such an scenarios arose. That is, whether any new policy was created, or whether the existing policy was tweaked to some extent, or there were certain system interventions which were introduced by the company in the IT infrastructure to prevent such happenings again in the future. So that is what has been to be disclosed here. Coming to disclosure number 8, this is a fairly simple disclosure of the number of days of accounts payable, and the formula has also been given. Now, why is this important? Under principle number 1 is it shows how fairly is the company dealing with its suppliers. The suppliers will have a lot of traders and original equipment manufacturers who will be small players. How is a company which is listed and in the top 1000 companies of the stock exchange, how is it dealing with the small traders and suppliers? So in the cases what we have examined, Marico Limited has the number of days of accounts payable as 68 days, which has increased from 64. And TVS has got 50 days, which has increased from 49 days. Coming to the last essential indicator, which is a concentration of purchases and sales with trading houses and dealers, and transactions and loans and advances with related parties. So the business has to disclose what percentage of its total purchases is from traders and the number of traders it is dealing with, details of the purchases from the top 10 trading houses. Similarly, what is the sales to the dealers as a percentage of total sales, the number of dealers it is dealing with, and the concentration of sales to the top 10 dealers in its dealership list. Why is this important? This concentration of purchases and sales shows the openness of the business. The more number of dealers involved and the more distributed is the business of procurement and sales, the more open the business is. On the contrary, the more concentrated the procurement and the sale is with limited number of traders and dealers, more is the possibility of a situation of hand in glove of the employee with the trader or the dealer, which is a prerequisite for any kind of bribery or corruption. So that is why this disclosure is important. The third section of this disclosure relates to related party transactions. Related parties, we have discussed, is defined by Section 2, subsection 76 of the Companies Act 2013. It consists of all those entities where the director is interested, or the KMPs are interested, or there is common directorship, and also holding subsidiary companies. Now, purchases with related parties have to be disclosed. Sales with related parties have to be disclosed. Loans and advances as a percentage of total loans and advances have to be disclosed. And investments made during the financial year as a percentage of total investments made has to be disclosed here. Marico Limited, in its disclosure for financial year 23-24, has disclosed that it has got 130 trading houses from whom it purchases its raw materials and 1,597 dealers to whom it sells its final products. The top 10 trading houses form 33% of the purchases, and the top 10 dealers form 27% of the sales. It has very limited amount of transactions with related parties, but the loans and advances given to related parties is pretty much high. And also there is considerable amount of investment in related parties. Coming to the first leadership indicator, it talks about awareness programs conducted for the value chain partners on any of the principles during the financial year. Now, as we said, the leadership indicators are for aspiring organizations. Here, the companies who have gone beyond themselves and started tapping the value chain partners in making them sensitive towards, conducting business with integrity. would make disclosures under this particular disclosure. So the number of training programs held, the topics covered in those training programs, and the percentage of value chain partners covered by the program. Mind you, this percentage is not by numbers, but by the value of business done with such partner. We'll take an example here. Marico Limited has conducted 22 awareness programs in financial year 23-24 and covered 58% of the value chain partners. The training programs were conducted on mostly health and safety topics. Coming to the last leadership indicator, which is about details of the processes in place to avoid or manage conflict of interest involving board members. So in case of board member, how is the company managing the conflict of interest? Conflict of interest, as we said, it is inevitable. It will happen. But what matters is how is the company managing such a scenario? So Marico Limited, there is a Marico's code of conduct, which applies to board member as well. And they have to give a quarterly affirmation with respect to compliance with such code of conduct. Number one. Number two, under section 184, we had said that directors make a periodic disclosure of the entities in which they are interested. Number three, whenever the discussions related to transactions with such related parties are happening, such board members will be absent from the meetings. Number four, all the related parties transactions have to be approved by the audit committee and subsequently by the directors or the shareholders. Number five, there is a code of conduct for the independent directors as well, which need to be followed by the independent directors. So this is how Marico Limited manages the conflict of interest scenarios. So we have come to an end of the disclosures under principle 1, which is about good governance. In this disclosure, we talked about the fines and the penalties, the cases of corruption and bribery, how companies manage conflict of interest, and the disclosures related to related party transactions. In the next presentation, we will take a look at the disclosures under principle 2 of the NGRBC principles. Thank you for now. Bye-bye.